Welcome, guys, to Elite Acquisitions and Investment Banking. I'm here with Ansi, as you know, and nonetheless, Damian, the guy we posted the picture about, future hedge fund manager, currently on his way to millions. Come on, Damian, how does it feel, man? Tell us about it.
It feels amazing, man. It's been a long ride, I will say, but still a long ride to go, and I'm very satisfied with what I've achieved over the past few months.
Great to hear. So, let's talk about how we were able to help you because we're looking to spread the message. There's a lot of misinformation, disinformation in the M&A industry, and we've noticed the biggest issue in the game right now is finding an investor to fund your deal. And I know you took an alternate approach. You took the approach of instead of finding an investor to fund a specific deal, and then the deal doesn't pencil out, you went and found an investor to fund your business, irrespective of the deals. So, what was it like before you had our product or service?
It was fairly tough. It was just an idea in my mind that I never really took action on. I got a lot of information overload whenever I was on YouTube, looking at a couple of competitors. I really didn't understand exactly what I was doing. And I know we'll get into that shortly. My experience, most likely, of how it turned out, but it was very tough. I mean, I didn't feel like taking action on any of this stuff. Just had a lot of information overload from competitors of what I will not name, but they're out there. They're very shitty, by the way. I heard very bad things from their experience whenever they transferred over, and my experience with y'all was the results speak for themselves, and I've done pretty well so far. Still a long ways to go, but I was very happy with what has happened so far.
Great to hear. And you broke a milestone that not many have in the industry. What I mean by that is a lot of people see their ticket out of the rat race as closing the deal. Meanwhile, you were able to close the investor. And now you got out the rat race to focus on essentially becoming a millionaire, buying businesses and building your empire. So let me ask you, where did you start your search into M&A? What got you into this idea?
So I would say I came across this ad by this guy. I'm gonna say his name, but he posted this video on YouTube, like I mentioned before, and I came across M&A, and at the time I was still doing real estate, and when I was doing was it just became an idea in my mind, like, oh, I want to buy up some companies, I want to consolidate a particular sector. I didn't know exactly what it was, but it was on the back burner for about a year, and then I came across it again and thought to myself, all right, well, let's time to pull the trigger on stuff. And I started looking around, started looking at who was out there, the marketplace, who I could get advice from. I happened to come across you and Ansi, y'all's group, and of which in the Facebook group there was just so much value. I mean, even the stuff that was out there for free was better than what the half of the shit these gurus were putting out on their YouTube, on their Facebook groups, on their email newsletter. It was all shit. It was all fluff. They were just trying to sell you something before they even gave you anything. It was all the same repetitive shit. It didn't really help out. And I didn't feel like there was any sort of traction or results that I could have been able to bring um, to be able to do this. I didn't have the confidence to be able to do it. And then um, after coming across y'all's Facebook group, as mentioned, that's where I pretty much got the free value just from like the scripts. There was videos on y'all had about the SBA. Well, a perfect example. Let me give you a perfect example. So a bunch of these gurus out here talk about going the SBA route, which if you want to, hey, that's fine. If you don't want to, like me, I believe you shouldn't. What I was informed was whenever y'all had a video and I didn't know about this and I did my research on it, the SBA takes up all the collateral you seize from what I was informed at that time. The collateral or assets you get on the back burner on the back end. So future collateral. So if you acquire business A, business B will also be used as future collateral. And you're also on a personal guarantee of only $5 million, which I know still is to date. So just stuff like that, like little stuff that these gurus aren't talking about, that they get people involved. They tell people, oh, you could own a business, but they don't tell them, hey, you're gonna operate the business. So meaning you're gonna have to work for the business owner. That's not my cup of tea. I don't think it's a lot of people's cup of tea either. But that was pretty much what stuff like little things like that really helped me during my search of the free value you guys were giving.
Appreciate that. So I know initially with the membership, and this was the big thing about it, you were not only getting the information we had, but any information in the future. And I know ANSI started with the capital raising approach, getting the capital partner. Because initially our approach was let's find a deal, let's value it, let's lock in an LOI on terms that make sense, and then go after the investors as we've seen other members do, right? And they've had luck that way. But it is a long road to get that LOI. So ANSI started with the capital raising, specifically finding a capital partner to fund you. Because this is what a lot of people don't know. In the United States of America, for you to deal with investor money and classified as passive investors, you need a fund or you're going to get sued by the SEC. No investor is going to give you a bag of cash or write you a check to your personal bank account. That's not how it works. If that was the case, we'd have con artists on every corner taking everybody's money. So the SEC came up with those regulations. Now, tell me your experience with ANSI and his advice regarding finding a capital partner, your search for one, getting those investors, setting up your fund, and so on. Was his advice, what he told you, was it applicable? Was it actionable? And did you get the results you promised?
Yes, yes, yes. So, in short answer, long answer is it was I don't know why I put it off. I was being generally lazy. I thought the old approach of finding a deal was the right way to go. And as you mentioned, an LOI is a long path to go, even past due diligence to be able to close the deal. It's still a long ways to go. Now, finding an investor is very, very important, I believe, based off my experience now, because, to put it quite simply, it gives you the confidence that just breeds that it shows in itself. So when you're talking to other people, other investors, or other accounting firms, whatever it may be, knowing that you have someone willing to back you, to be able to help you or cover living or business expenses and business and expenses, it helps you breathe the confidence knowing that someone believes in you in order to be able to do this, even though you have no pre-existing revenue. And that speaks more than anything, because money talks and bullshit walks, right? Bullshit walks meaning if you talk to a seller stating that, oh, I could be able to buy this business from you, okay, great, but then you go under LOI and you don't have the network or resources to be able to do that yet. On the flip side, if you do have the network or the resources to be able to allow you to do that confidence is going to be projected to that seller. I don't know what the whole thing is, the psychology behind it. It's just different, where you will be able to speak in a manner where you will be able to feel confident enough to talk to that seller or that owner in that circumstance, in that point of time, knowing that you could possibly deliver, that knowing that you are more than confident, more able to deliver on the result that you speak to them. Because let's just put it this way: one, you have the money backing you. Two, you also have the relationship of that investor to be able to bring you the relationships and also the experience that they have to be able to help you close on the deal. I do believe it is applicable, just because, or possible, because I found my investor after tailoring my approach of what we were looking to do or willing to give up, and it took some tweaking, and I talked to ANSI about that whenever I had started. of what to be able to give an investor, and I had to give him more an incentive. And it was still fair. At first, I was being greedy, where I was only wanting to give an investor 20% of the general partnership of a fund, while I keep 80%. Instead, give them a portion of the parent company, so that way they're able to get something more the long run, a long-term relationship. And in return, they give me money to they invest in me and my idea to be able to go out and get this job done, while also minimizing the risk of their investment, because now I can focus on this full time.
Right, and you
So
got your investors on a subscription-based model, correct?
yes, yep.
So what
They're
are you
paying
receiving on that?
on the subscription-based model. They're paying 18,750 up front, and then 6,250 every month for the next 3 months, and then after we will re renegotiate that if needed.
Great.
But I
And
covered for the next 6 months of living and business expenses.
6 months. That's amazing. And you said now a board member is bringing you two deals, a 14 million and a 15 million?
Yep. So I got a board member who's bringing in some deal flow for me currently right now. He's very well connected in the HVAC and electrical space, of which I've told him we only look at HVAC and plumbing. So he knows that, and he's bringing us two deals to look at that he has very good relationships with. They trust him, and he put his reputation out there for us to be able to go out and look at that possible acquisition.
And let me ask you a question. If you didn't have that investor backing you, would that board member put his reputation on the line to provide you a deal?
That's a very tough question. I
know,
believe,
speaking for yourself,
yeah,
I wouldn't see that as an issue.
I
But
don't
as a person
because
who's just starting out, has zero experience, you think somebody would put their 40-year reputation on the risk for a kid who thinks he can close a deal and doesn't even have the capital financing or backing?
it's very tough, but I would say no. Just because, once again, going back to what I said, it's just that level of confidence, and also the backing of it. As he was very eager to meet who my investor was, of which I actually went to that board member's house because he's located out here locally. And that really developed our relationship. It also helped me project, once again, saying, hey, look, I have an investor who's willing to cover the cost of what we're looking to achieve. Just something about it. I don't know if it's just the result speaking for itself, giving you traction, or it's the confidence that you project. It's very difficult to not do it, because when I was recruiting former board members, I wasn't able to do it as good, or I wasn't able to project that confidence.
Let me
Of
add
which
to it. Is not and is great is also the confidence, like you said, in what you did, but in the board member's mind is if he was able to pitch this investor to where he could come in and put some sort of money and say that investor backs out, I know he could do it again because he was able to sell that vision that well that somebody was willing to put their money on the line. So it adds to your reputation incredibly, because you're a guy, you're coming from real estate, and you're getting into a space where you have no experience or track record. I'm looking to buy a business, and hey, you know what? I was able to close the guy who signs the checks, and he's on board with it. So if we got the money on board with us, bring the deals. Now, let me ask you something. When you started working with ANSI on the capital raising, finding your capital partner, how was the process? Did it went in a Was it faster than what you've thought it would have been?
Yes, it definitely has, because it only took about 2-3 weeks of me finding this investor, of which it felt like it was a long haul, because I was trying to tailor my approach to finding a new investor. But I remember Ansi always told me when we had one of our weekly calls, he said, you got to kiss enough frogs to be able to eventually find the right one. And after doing multiple calls, I had over, during that 2 to 3 week time, I had over like 30 to 40 calls with investors, of which 2 to 3 came back to me saying that they'd be willing to. I picked out which one I wanted to work with to be a part of our team, and the results speak for themselves. I mean, it was difficult during that 2 to 3 weeks, but you just got to get the job done. And I just remember that thing Nancy told me because it really stands out. You can't give
And
up.
the difference is you were speaking with guys that were the ones that signed and wrote the checks. And there's a big problem in the industry. There's a lot of people that masquerade and say we could get you capital, and they're actually brokers. So you're not speaking on a one-on-one with an individual that could sign your check, but you're going through an institution or a committee who just sees you as a number. So what you went is you went through those investors and you saw who you had a more personal relationship, because that person is also going to be a part of your business. So you want to be able to match visions. Let me ask you, when you were speaking with all these investors, whose script did you use?
Y'all's.
Did it work?
Fuck yeah, dude! Look, it's working right now. So that was a very very simple answer. It worked. All the fucking scripts work for everything, not just the investors. I mean,
Hey, what do you think about our approach? Because nobody does this, but the discovery call with the business owner. Because a lot of people just like to say, "Hey, John, 3 to 4 times."
oh, let me tell you, it oh my god, it saves so much time. Saves you time from making bullshit assumptions before you even have the analyst. Every single thing adds up. The whole process from the cold outreach, from the discovery call of them having a time to talk to you, you making sure it makes sense to be able for you to analyze it, them sending you the financials, and then you making an offer. It all makes sense. There's no reason why not to do it like that. I don't know why you would make an offer over the first thing. It's like if you go dating with somebody, right? You're not gonna say, "Hey, yeah, let's like if you go out with a girl, right? So like say or
Just propose,
guy,
get on your
whatever.
knees.
Yeah, whatever you're into, you get on your knees and just propose on the first date. No, you're not gonna do that. Or saying, "Hey, let's move in together." After you've had one date, no, you're gonna do a few months or years or whatever of dating and warm them up before you even do any sort of thing like that. So it all makes sense. I don't know why anyone wouldn't do otherwise, if I'm being
Now,
honest.
let me hop in, and you already know I have to touch on Ibera, or as you called it. Can you say it?
Executive bullshit.
Intended to
Intended
distract attention.
execution. Yep.
What are your thoughts on EBITDA after we started teaching you about true financial metrics such as notepad, free cash flow? Once you start peeling the onion back, the interest, the taxes, the depreciation, amortization, and they say they're the ones that know how to value the businesses, right?
So in the 1980s, investment bankers came out with this thing called EBITDA to overwrite businesses at a very fast rate and to be able to sell them faster. It was called EBITDA, and then in the 2000s, there was a crash that a lot of people know as the internet crash, the dot-com boom. That was part of the reason of this variation factors, but they still use it commonly today, and it's probably helping, especially in tech and other realms as well. Now, the reason why EBITDA is like I've stated is because let me give you a perfect example. A business owner that buys a let's say a truck 10 years 10 years ago for $100,000. He wants to depreciate that asset over 10 years at $10,000 a year to write it off. Well, that that um, that truck is not worth $100,000 anymore when you go to the investor or lender, whoever you're trying to utilize it as collateral. It's probably worth 50,000 maybe, and he's still trying to write it off. So it's not valued at what it was. Therefore, it shouldn't be in the business in their financial statements or their balance sheets as that report that they're stating. Ideally, it should be half, if not less. So that's just one thing of the pie. There's multiple other things, equipment that could be 15, 20 years old that they're still trying to write off over X amount of years. Another thing I had was an owner tell me that I had another owner tell me that they were trying to that we're talking to right now. They were basically telling me that they were utilizing ad backs from a what was it? Some ad backs on some stuff that they did for the building itself. And they stated that that was positive cash flow because it's going to add value to the real estate. I was like, that is an expense. It may in the back end, but not right now. It's not the value of what the business really is, nor the real estate. It's just stuff like that. Another one.
Hey, let me add to that. You know what was the joke of 2020? PPP loans. Supposed to be free cash flow.
I remember that. I remember when y'all told me about that.
Yeah, like, I cashed that from a broker firm.
Oh, like
what are your experience with brokers, man?
I don't even bother. I talked to two of them and I never talked to them again. Let's put it that way. I'm not if I believe in what Einstein says. If you do the same thing overs and overs again and expect a different result, that's the definition of insanity. I talked to two brokers, of which they didn't know shit about how to evaluate a business or even what the business was doing on their cash flow, and they weren't able to provide anything. And I'm sure other people have experienced that as well. Y'all have multiple times. So it's a pain in the ass. So I just don't deal with it.
It's easy. People see it as low-hanging fruit till they pick the fruit up and see all the worms in it. Then it's like, shit, I don't want to eat it no more.
There's that desperation again. I mean, you want to do that, utilize SBA. Hey, you can. Anyone can do a deal fast, but not everyone could be able to find an investor, start a private equity fund, and put their pen to the paper and actually value businesses and negotiate. It's easy. It's not. I wouldn't say it's entirely easy, but I think it is fairly easy for someone to be able to do a deal if they really wanted to, if they were that desperate. If you want to do that, that's fine. Go ahead.
We've said it. How to get a deal done in 90 days. All right. First thing you want to do is go to a broker firm. If you want to overpay and fund with the SBA. There you go, guys.
And use EBITDA.
And use EBITDA. That's where the overpaying comes into play. Yep. So let me ask you something. Did you think Nancy was crazy when he told you an investor could cover your living expenses?
At first, yeah. Until I put myself out of my comfort zone to be able to do it and just actually fucking listen to what he was saying. As I would say to myself, I didn't believe someone would do it. I thought someone would just cover the business expenses, but after realizing someone would actually cover the living expenses to do, it's not so crazy. And I've done this myself. I just got to be more hard on myself to be able to put it. We're just doing it. And that's it. It's just simple. Keep your investors updated, and then ask what you need. And if it's fair and it's necessary, go out and do it. If not, if you feel like you need a second opinion, that's what your board's there for as well. You go to your board, say, hey, I'm thinking about doing this. How can I propose this to my investor? Or how can I do this? And they can help out with that. The board helps out in many ways, not just from deal flow or looking at deals or what their title is. Start up and they're willing to help you. So they signed up there in the first place because they believe in you. So you can utilize that at any time.
Great. I'm glad to hear, man. And let me ask you something. Could you have done this without this? And would you recommend this to other people, being a part of the membership?
I don't think I could have. I think I would have probably tried this on my own for about 3 months and then probably just gave up and gone back to real estate. I would definitely recommend anyone who's starting out looking to do this, just because I personally had put it on the back burner for a year before I even decided to take action. And when I took action, I saw the opportunity, saw what value you all were giving to the marketplace, and basically it got me to where I am today. So I would recommend it to anyone looking to start out or do whatever they're looking to achieve in starting a fund.
That was great, man. And guys, look at this face. This is gonna be on the poster of Forbes real soon. Hedge fund manager. And you're Hispanic, right?
Yeah, I'm half, but I am Hispanic,
I'm
Irish
glad,
and
bro.
Mexican.
We got people over here doing great things. You see a minority, I see a billionaire. Appreciate it, man. Thank you very much. And remember his line, Ibra, executive bullshit intended to distract attention. So for all of you guys out there, make sure to use free cash flow and not overpay. Thank you very much, Damian. You have a great day, man.
You too.
Peace.